Yeah, so MES. Let's start with MES. So, oh, I'm still in this futures contract. Yeah, I'll close that by the end of the day. I don't want to hold that overnight. Other than the scalp in the futures contract, we got some downside hedges, long puts, put debit spread, another put debit spread, and then lots of long puts, or short puts, excuse me. So I've got put ratio spread, 4x2, so 2 naked puts. This is almost at 50% max profit. I certainly could close this at 48% max profit. I'll hold on to it a little bit longer because if we get another uptick, because the ES was up bigger this morning and we may get a little bit of reversal. I'll try to squeeze a few more bucks out of this, but I can certainly close it right now. This one, another 4x2 ratio spread, so 2 negative short puts involved in this one. Only 10% max profit. It's not going to get closed today. And then I opened 2 new short puts at 86 DTE yesterday, which is kind of my standard on these. It's a lot of times I will go out about 90 DTE, typically usually somewhere around 7 to 10 deltas. There's actually 12 deltas on this particular put. So just a little higher delta than normal, but still kind of a normal trade. I go about 90 DTE, sell around a 10 delta put. But I didn't do that by itself. A lot of times I'll do a ratio spread just to kind of have a built-in downside hedge. That's why I've got these ratio spreads, this ratio spread here. Well, what am I doing with these 2 naked puts? Well, I decided to hedge them with this put debit spread in ES. So, I went to the ES for the put debit spread component rather than the MES. The reason is because just less contracts because of what I was trying to do here. So what I was trying to do here, my thinking here was go out, somewhere around 90 days because the same cycle I'm going to be in the short put. And I did a way out of the money put debit spread. I wanted it to be lower than the short puts I was going to trade. This is for crash protection, right? You need the market to crash to ever profit on this thing. I did a 50-point wide put debit spread. I'm trying to pay $100. That was my goal. And it's still exactly that price today. $100, right, I pay. And if we get a big crash down, max profit on this trade would be $2,400, right? So that's a $2,500 spread because of the 50-point multiplier in ES. So pay $100 for the spread for the potential to win $2,400. Now, it's a very low probability trade. This is the kind of trade that's not going to work out very often. You need a major event to happen. And I definitely did not want to pay the $100 and just, see what happens. I wanted a way to finance this put debit spread in the ES. I don't want to have to pay that $100. Well, the way to pay it, or the way to finance it, is to go get a credit trade on, right, for at least $100. In this case, I sold 2 short puts in the MES, 12 deltas, same expiration, and I sold them for $44.50 a piece. The multiplier in MES is 5 rather than 50 because it's 1/10 the size of ES. So what is that? Around $250 per. I'm gonna have to break out the calculator. What is that? $220 per. $440 credit. Oh, got $440 credit. Only paid $100 debit for the put debit spread in ES. If I take these off at 25% max profit, that becomes a free trade, the ES trade. 25% max profit's nothing, right? If I take these off at 50% max profit, which is what I would plan to do, I'll make $220, which means I profit $120 because $100 will pay for the ES put debit spread if I'm thinking of them as one trade. So that's my thinking there. I'm always selling puts in MES anyway. I might as well use some of that money to finance some serious crash protection. And the reason I'm doing this is because I'm carrying a lot of long deltas. I have long shares, lots of long shares in the market, right? I'm really long the market. I'm going to use some of these ES and MES positions as a hedge. And I can actually show you how this would look on a risk profile if I go to a P&L graph here. Can you guys see the P&L graph? I may have to change the screen here. Instead of the application window, let me change to share a screen. And now you guys should be able to see this P&L graph. So on Tasty, if you're using Tasty, you've got this button here, P&L. You click on it, you get your P&L graph, your risk profile for your entire portfolio as it currently stands, which is kind of neat. The cool thing is when you pop this out, you've got check boxes. You can turn on and off any position. And what I'm going to do, I'm going to turn everything off, and I'm going to put on the put debit spread in ES, right? Where I'm risking 100 to make 2,400. And then the 2 short puts in MES to more than finance this thing. And this is what the risk profile on those 2 trades together look like, right? Basically, got a couple of 12 delta puts way out here. And if I start to lose, you know, I can lose, but I don't necessarily lose in a big way because I've got the debit spreads that help offset. And this will be smoothed out like in a T0 line, right? It won't be so jagged, but, you know, it's kind of, you know, I've got some protection till about here because of those put debit spreads in a crash event. Hopefully it gives me the opportunity, you know, in a crash, you really can't do anything as far as you're going to get killed on all your short puts. Like the market makes a crash of, say, 1,200 points tomorrow. It doesn't matter what short puts you have. 10 deltas, 5 deltas, 15 deltas, 2 deltas. They're all getting killed, right? So you're going to get murdered on all those. But the put debit spreads will help lessen the pain. But on a slow grind down market, which is what I'm hoping for, maybe we slowly get in, you know, toward these puts. They're getting hurt a little bit. Well, I just roll these puts, the short puts out in time. I can leave the put debit spreads on. That way, if we keep grinding down into the put debit spread, maybe you make a little money, or maybe you don't. Chances are, again, this is a very low probability trade on those put debit spreads. They're so far out of the money. It would take like a once every 3 or 4 year kind of event for you to ever really be in a situation where you could profit on them. But there's nothing wrong with having them on. Again, you know, it's certainly better than just having naked short puts. That's what I'm trying to avoid these days. It's like if I'm going to sell naked puts, especially in the ES or the MES or SPY or QQQ, any of the index products, if I'm just going to sell a naked put, I need to be doing something else, right? I need to have some other kind of hedge on, whether it be just selling the call side of it for a strangle, selling a call ratio spread, selling a call credit spread, buying a put debit spread, or just putting on initially a put ratio spread to begin with that has a built-in put debit spread. You know, I just want to, you know, I just want to have a couple of different ways to make money, especially in a downturn. I think it showed you were going to pull in 45K if SPY ends where it's at the end of the period. It showed I was going to lose 45K, assuming there were some hedges. Oh, well, let's take a look. Now, because I've got the graph look funny if you were asking about all of my positions on. Yeah, all of them. Yeah. That's just because of the shares. I've got a very, you know, those shares cost a ton of money and I'm up a lot of money on them. Right. It's basically saying I'm going to give away all of that and then some, right? Right. I'm not going to do that. Well, you gotta say I'm not going to. It's possible something crazy could happen. But if the market really started going down in a big way, I'd get out of some of those share positions. I'd have to. I wouldn't necessarily have to, but it'd be a good idea, right? Yeah, owning shares really, it throws off the calculations. Just because technically I'm in a position, right? And I've been in the position to the point where I'm up thousands of dollars on some of those positions. And yeah, I wish I could reset it to zero. What you can do though is just turn off the share positions. Just turn everything off that involves shares. And this is the risk profile on everything that isn't shares. Yeah, which is still, it looks like a crazy risk profile, but it's scrunched up. So I don't have a lot going on without the shares as far as directionally. No, not really that directional here. And I've got a wide risk profile. Like I can't lose to the upside, and even to the downside, it takes a while before I start losing on a lot of things here. I'm assuming because of some of the hedges, like the long puts and things I've got on in MES, all those debit spreads now in ES. I don't know how this thing handles VIX calls. I have in the past carried some long calls in VIX, and I don't really know how it handles that because the beta weighted deltas, VIX is such a weird product. It's kind of, it's not a perfect P&L graph, like I wouldn't necessarily trust it 100% because obviously it's trying to beta weight everything to SPY is how it's calculating. It basically correlates everything to SPY, all your positions, and it's treating your overall portfolio as if it was a SPY position. Here's what it would look like if SPY made the move up and down. KFall, what's my overall beta weighted deltas? Somewhere around 200. I think last I checked. Yeah, you've been trying to keep yours at 200. Yeah, I want to be long the market right now, right? And I did that because of the crash. Let me switch back to a normal sharing the screen, but you guys can actually see TastyTrade platform. I'm not going to pull out the P&L graph anymore. See, okay, you guys should be seeing everything here. Let's go to SPX to get the continuous S&P contract here. Yeah, KFall, your 109 beta weighted deltas. I mean, there's no right or wrong with the beta weighted deltas either. Some people try to carry positive deltas. Some people purposely want to carry no deltas, try to be as close to zero as possible. Some people want short deltas. Different ways to trade for different people. So, for me, I primarily want to be long. So that's what I'm trying to do. Some people primarily want to be short. So that's what they're trying to do. My thinking, though, when I started adding a lot of those beta-weighted deltas, those shares, just to get static long deltas to the market, is when we were doing this, once we started, especially the one big up day, like kind of signaled, hey, this was over. Like you kind of knew that was the beginning of the end. I took some of those share positions, probably at least half of what I'm in immediately, and then added to it on the way up. Because I kind of expected the market to rebound after the big drop. That's typical. At some point, I may start unloading some of those shares because they were a nice little profit. Now, how long do I want to hold on to them? Because they are risky. If I'm holding 200 beta-weighted deltas, right, I'm going to lose $200, right, every point that SPY drops. Because it's like I'm long 200 shares of SPY, If the SPX or the ES crashes 1,000 points, that means SPY loses 100 points. I lose 100 times 200. What is that? It's a trick question. That's $20,000 I would lose, right? If that event happened, that's how much those shares that I'm in, all those beta weighted deltas would lose. That would be nasty. I certainly don't want to do that, but that's the risk I'm taking right now.